What if I told you the world's biggest companies just lost $1 trillion in a week? This is Kenya News Update today. Coming up, you'll discover why the tech giants are bleeding cash, what it means for your investments, and the shocking AI gamble that could make or break the entire global economy. Meet the Magnificent Seven: Microsoft, Amazon, Alphabet, Meta, Nvidia. The titans of our digital world. Last week, their combined market value plunged by over $1 trillion. That's more than the entire GDP of Kenya, Uganda, and Tanzania combined. But here's the twist. This isn't a crash. It's a calculated, terrifying bet. And it's all about artificial intelligence. The market grew jittery after expenditure outlooks continued to shoot through the roof in big tech earnings last week, as companies doubled down on AI bets. Amazon, Alphabet, Microsoft, and Meta reported a combined capital expenditure of about $120 billion in the fourth quarter alone. That's just 3 months. But here's the part that will blow your mind. That figure could approach $700 billion in 2026. That's higher than the gross domestic product of countries like the United Arab Emirates, Singapore, and Israel. They're spending more than entire nations. And investors are terrified. Last week was the worst for the Magnificent Seven stocks since April, when U.S. tariffs plunged markets into crisis. Signs of recovery were on show as the markets closed last week, with Magnificent Seven stocks rising slightly on Friday, despite Amazon falling over 5%. But the volatility is real. Cloud companies' growing margins come alongside potential stock volatility amid macro headwinds. But management teams seem confident in their ability to forecast demand, and that capacity will be fully utilized in 2026. The markets reacted negatively to Amazon and Alphabet's CapEx guidance being well above consensus expectations. This overshadowed stronger than expected cloud growth for both companies. So why are they spending like there's no tomorrow? Nvidia CEO Jensen Huang says the tech industry's surging capital expenditures for AI infrastructure are justified, given the sky-high demand for computing power. It's a massive gamble. They're building the future, but the bill is due now. And here's what nobody's talking about. This spending war creates a seismic shift in global power. The money flowing into AI chips and data centers is staggering. It's reshaping entire industries and national economies. But if the demand doesn't materialize as predicted, the fallout could be catastrophic. Some analysts predict room to grow for hyperscaler CapEx. As monthly tokens process grows exponentially, aggregate cloud revenue accelerates, data center commitments expand, and data center component suppliers highlight accelerating demand, there will continue to be upward pressure on hyperscaler CapEx estimates. So we're left with a trillion-dollar question. Are these tech giants visionary builders, or are they steering the global economy towards a cliff? The tension is palpable. On one hand, you have unprecedented innovation. On the other, unprecedented risk. For investors in Nairobi, Lagos, and Johannesburg watching their pension funds tied to these stocks, this isn't just Wall Street drama. It's personal finance on a knife's edge. The stakes couldn't be higher. Do you think this AI spending spree is genius or madness? Will it pay off by 2026, or will it trigger a global financial crisis? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news that connects the global markets to your wallet.